Hi, I'm Angie Moon. I'm second year PhD, passionate about Bayesian entrepreneurship. And Rahul and I met during the Bayesian entrepreneurship reading group that's going on this seminar. And as part of that research, I've been trying to analyze how the founders and investors make their decision for the investments. So this is the talk, Decoding Venture Capital Decision, a computational framework for understanding investors' perception. This is a joint work with Jeff Dawson, and feedback welcome. And feel free to interrupt during the talk so that we can have a better interaction.
So the audience is your thought. What kind of feedback?
I have special prompts for the feedback.
Okay.
Yeah. So preamble, my research revolves around three bodies of problem I experienced firsthand as a scholar and entrepreneur and world citizen. So I had a lot of pain when I was doing my startup. Like their cognitive overload is, I think, the highest as I could imagine. So yeah, I want to do a work where scholars' theory can be productized as used by the founders, and then those are evaluated by the community. So details in my website, but I would revolve around these three topics for today's talk. So first of all, what are the big questions we're trying to answer? And then what are some challenges in studying this? I was curious about how different investors construct meaning from identical startup attributes. And when I say startup attributes, what stage they're in and how execution this team would like to have, their PhD or their background or what the idea is. So in short, I try to think it as observable startup attributes to the perceptual frameworks and investment decisions. And I would like to analyze it more systematically, how the variation arises from individual investors' interpretations. So this is the general framework of the study, and I chose the four sectors, like what sector they're in, the stage of the venture, and the team characteristics, and traction indicators. And we're trying to map that into the two important things that investors, based on the existing literature in entrepreneur finance, there is a framework called horse or jockey. So jockey is the entrepreneur riding the horse, and horse is the idea. And if has anyone seen the Silicon Valley TV series? Yeah. So there are several episodes where CEOs get fired from kind of the idea they were developing. So you can think it as the horse is still there, but the jockey changed. But it can also be otherwise around. There are a lot of pivoting cases. I have seen extreme cases where ad tech company pivoted to a flooring company. So that's the same jockey, but with the different horses. So my point is, when investor decide to invest in this venture, there are several observations, and then they're mapped into either idea, like what is the market potential of this idea, and what is the team's execution. Like for instance, to give a clear example, idea can be for Starbucks selling a high quality coffee to American market. And Howard Schultz executed it, but there are similar other business entrepreneurs executing the same idea, for instance, Pete's. So yeah, that somehow explains the overall framework. So use of answering this question is, once we decode decision-making mechanism of venture capitalists, we can productize this to help entrepreneur navigating the funding domain, or we call it capitalization strategy. And based on my interaction with at least 10 of my entrepreneur friends, they have they struggle a lot during the who should I ask? Who should I pitch this idea? And depending on what investors they're speaking with, their reaction differs a lot. But in order to get investment, if there is room full of 10 VCs, you only need to persuade one of them to invest in you. You don't need to persuade all of you. So that's what I mean by capitalization strategy. Now, what are the challenges in studying this, answering this question? First of all is how to model perceptual dimensions. And our approach was to synthesize the lay theory and hierarchical Bayesian modeling. And when I say hierarchical Bayesian modeling, it's like you have investor archetype. Some investors prioritize team's execution. For instance, Mark Andreas, where other investors have different opinions, like idea is what is most important, like Peter Thiel. And also like PhD background and IP's importance, that all depends on where the investor's experience is and how their perceptions for the potential is formed. So I thought hierarchical Bayesian can be a useful framework because it captures both the population variation and also the individual variation. Now, second challenge is how to collect the data. I don't know Peter Thiel. I don't know Mark Andreas. If you know, let me know so that I can contact to them. But now with the LLM, I thought there might be some chances to get some consistent output from them. So surveying VC is very expensive and time consuming, and we cannot ensure consistent answers from different combinations. And when I say different combinations, I think if you were to take away one number from this talk, I think this would be 1,620 and how it came up with. And that's we have 4 different attributes that I extracted from the literature. And for each of them, there are 3 different levels. They're mutually exclusive. So you have 3 to the power of 4, and for each of them, we generated 20 linguistic description of the startup. So based on those 1,620 startup descriptions, we gave it to Mark Andreas synthetic investor and asked 3 questions. Like, based on this linguistic description, let's say we have a PhD background, and also we are in an idea conceptualization stage, so and so. It's like 1 paragraph. And do you think this startup market has a potential? And second, do you think this team has an execution yes or no? And then based on that, are you going to decide? So those are the 3 answer questions we'll ask for each of the 1,620 descriptions. So to summarize, we're going to translate observable startup attributes to investment decisions through different perceptual frameworks. And we can do some systematic variation from this. And we aim to model this interpretation differences to benefit entrepreneurs. Any questions so far?
How did you model your investor? Is it something that you created from ground up, or?
Oh, we're gonna cover it. Thanks for the question. May I ask your name?
Emma.
Emma. Hi, Emma.
I'm an intern here. So.
Okay, yeah, sure. Thanks for the questions. So far, so good. So, may I ask your name as well?
Nat.
Nat?
Yeah.
Nat. So Nat asked, what are the expectations for this interaction? There are some research choices I need to make as a research entrepreneur, and I want to know which would be more helpful to the entrepreneurs. So after the talk, I want to ask, between modeling different archetype investor archetypes like Mark Andreas or Anderson or Peter Thiel, so and so, or more abstract investor characteristics. And second is, which do you think is critical for their decision making, like philosophy or the terms timeline of their fund, or their decision making style or risk tolerance? And also the third one is about now, if we somehow productize this decoding of the investor decision, how would entrepreneurs use this? Like between inverse planning some capabilities by inferring the investor. That's the first use case I could think of. And second is more kind of short term. Let's say I'm persuading Rahul to invest in me. And what signal should I send? Like how to do the pitch optimization. So those are kind of binary choices in front of me. So I would love to get your opinion about that. Now, jumping, yeah.
Can I ask a question about the first one? So we talk about
Yeah,
like
Josh.
an archetype versus a more abstract investor characteristics. I'm not sure if I know what the difference is between those two, really.
Yes, that's very natural because later I was gonna ask your feedback, not now. But yeah, we're gonna come back to that. Thanks. So here's Mark Anderson, and we created a synthetic archetypical investor, like Emma's question. So we just did a kind of quick check on this mental model in GPT. So like what is the important success of the startup, ability of team's execution or the quality of the idea? So as I explained, ideas are plentiful, execution is rare, so he values a lot about the execution. And like market dynamics favors execution. So he seems to have some based on, I think this is based on what he have blogged or taught like in the YouTube lecture. Based on that, this language model, mental model is formed. Now, how do we somehow make this more concrete and using some math? So we collected the data as I just described, 1,620 different profiles of the startup and generated, and we asked 3 questions as I explained. So just to clarify, these different combinations are 1,620, and for each one paragraph, we asked to Mark Anderson, we attached his blog and also his YouTube kind of books, lecture transcripts, so and so. And we asked the questions 1, 2, and based on this, what they think they're gonna invest or not. Yeah.
So you're using GPT for Gringo Mini plus a RAG that you built yourself.
No, I didn't build a RAG. I did it myself. I just collected his books and transcripts.
Okay.
One good thing about this research is VCs are really talkative animals.
Okay.
They just share their philosophy.
Okay.
Yeah.
And you just attach these as like documentation, there's no more like prompt tuning than that?
Yes, for now. But again, I'm happy to get in more input on how to make this more kind of build a pipeline for this. But it was mostly a manual job for now.
With the levels like none, some, a lot, or something like that would have each attribute had 3 levels.
Hey, here we go.
Oh,
Yes, yes.
okay.
I love this flow. So we had 4 attributes for sector, R&D intensive, or consumer products, software, enterprise solutions for the sector. And for, I admit it's not fully extensive, but I try to be very mutually exclusive, but that itself is some difficulty of designing this. But I based this research on I think 2022 paper by Aaron Scott et al. About uncertainties in startup evaluation in management science. But we started with a 5 level, but we ended up with 3 levels. So stage of venture idea or concept level, prototype level, or revenue generating, we can somehow expect Mark would likely to invest more in revenue generating compared to a very early stage. And team characteristics, founders' real prior startup experience or academic background, diverse team composition, and traction indicators, no funding yet, IP and patents plans filed, and have formed an advisory board with industry experts.
And these are supposed to represent individual continuous variable of the investor.
No, it's attributes of a startup. Yeah.
So there's still supposed to be like a single access per attribute.
Yeah, imagine you're prompting, hey, give me a description of a startup that has very R&D intensive, like hardware, and it's kind of in a prototype proof of concept. Let's say, imagine like an EV startup you want to try. It's R&D intensive, and we have some design of the car and how that interacts with the infrastructure in Boston, for instance. And we have some IP on battery technology filed. So if you prompt that, it will give some description, linguistic description of what would be this startup about. And that is being sent to the investor.
And our stage and traction, the level is supposed to be ordinal, and sector and team characteristics are just discrete, or
Yeah, good question. So far we just design as a categorical. Oh, okay. Yeah. So this is kind of, I just attached for our understanding. So this is what we fed in, and there is a linguistic one paragraph representation. And these are the three answers we get from Mark Andreas synthetic investor. And
it's basically not adding in more information than what you provided, right?
Yes,
It's just
yes.
packaging it.
yes. So that's why we are doing a 20 different realization. So even though in a same software sector and a revenue generating and same PhD background, one description can be about life science, and like one description can be kind of pharmaceutical or many kind of related things.
Where does that variation come from?
20 realization? Oh, I think we just didn't control that.
But did you ask it to, like, it just happens to fill in
Yeah.
stuff about the industry and other stuff, or?
I think there may be some relevance between like this sector with the industry, but we didn't specify whether it should be like kind of cancer or like life science or something like that.
Okay, but you just ask it to kind of elaborate on this profile.
Yeah.
Okay.
So that's why I mentioned designing this attributes itself is an art that needs to be more systemized, because we want it to be more mutually exclusive and extensive.
And sorry, then
Sure.
just from a sense of what is the information that it is sort of spontaneously adding? So I guess in some cases it might be the industry. What else is being added on that creates the variation in practice, just based on what you've seen from what it generates?
Like for instance, with team characteristics, would it say they have a PhD from a specific school? Would that make a difference? Or
Oh, I haven't experimented with that, but if I add MIT, maybe they have some preference for life science and space, right?
Yeah, like what exactly differentiates all the 20 of these random draws that creates variation? That's what I'm trying to figure out.
Yeah,
we just turn up the temperature or something? Yeah. Okay.
just fitting this in. So what do we find? So this is just descriptive statistics. So as we expected, team execution is most critical factor, nearly 100% investment rate when strong. Revenue generating startups are invested in far more than prototype stage, as we expected as well. Diverse team composition is preferred over prior startup experience or academic backgrounds. And startups with advisory boards and IP patents receive more investment than those without funding. R&D intensive sectors receive more investment than consumer products or enterprise software. Market attractiveness is prerequisite for investment, but with no investments in unattractive market. So that's just kind of summary of this 1,621 columns, rows. But in order to do this a little more systematically, we fitted 3 logit models. And these are kind of the posterior distribution we get for each regress coefficients. So this was freshly analyzed yesterday, so there may be some errors, but what I see is posterior distribution for the execution, which is this 12 to this, the first model. I'm analyzing this. And we have a dummy variable for the base level of idea concept stage. And both prototype and revenue generating ventures are more likely to be considered to be more executing. So this this being positive can be interpreted as compared to the base idea concept level, having a prototype is as much more likely to be perceived as having a high market potential. Same for the revenue generating. And this too is this part based on the description, whether they're gonna invest for, oh, sorry. So compared to this and this. So what this is getting in was team execution and attractive market attractiveness, and based on that, whether they're gonna invest or not. So I interpret it as considering this is way bigger compared to the market or ideas value. I thought Mark loves team execution. Any questions so far? So to summarize, we combine Bayesian modeling with LLM augmentation to create synthetic investor archetypes. Our framework models 81 investor types based on 4 key characteristics. Oh, sorry. This is what we are trying to do, but I didn't include in this talk. But yeah, I'm gonna discuss this later because we can think it as a archetype of a founder and archetype of an investor, kind of collaboratively making the investment decision. So my point was, just as we have created some characteristics representing the founder, we can do similar things for the investors as well. That was, I think, what Josh was previously asking, how to construct some abstract dimension of the investors.
Sorry, the Bayesian part just comes in as, it's just statistical.
Bayesian is just regression.
Yeah. Hierarchical modeling is where I ultimately want to go forward.
But it's not cog-
It's statistically or cognitive or like,
Yeah, ever since I met Rahul, we've been discussing like how different is statistics and cognition. I don't know the answer to that. I mean,
It's also kind of weird when getting into the normative-ish part where, like, suppose you come up with something like this and then you, I guess, the startup founder uses this to kind of come up with like a model of the venture capitalist. Is that kind of norm? Like, is that cognitive in some, like, if this is sort of an external prosthesis almost to help them, have a model of the venture capitalist. It's like, it's definitely not typical cognitive modeling sense. And I'm not sure that I would call it cognitive modeling.
So perhaps one way to spin this off in a cognitive kind of flavor is, I thought using this statistical model based on kind of, this is like a population result. We don't know whether I met Rahul and what his perception would look like, but at least this gives some kind of, based on the population of the VC or the deals going on, these are some means out there. And based on this, how does your philosophy differ and how does your timeline for your fund differs? And it would be kind of more resource saving to discuss based on that population.
I guess the concept is it could just also be like a regular logistic regression. There'd be nothing Bayesian about it. It'd be accomplishing the same effect.
Yes, yes, yes. But since I love Bayesian statistics, I couldn't leave it out.
If you wanted to push this in the direction, if you talk to VCs or private equity people or whatever, there's like two layers of analysis going on. There's the explicit stuff, and then there's their gut feel. Yeah, they're both are really important. And you know what you're doing, you know, like let's say you're a 67-year-old private equity investor.
Okay. Oh.
You know, your gut feel, your vibes are not random, obviously. It's the result of some, you know, data gathering process that's been going on for decades that then, you know, gets expressed via your belly feelings or whatever, right?
Interesting.
And so that is certainly a cognitive thing, right? And it's captured in this, right? It's just not differentiated from the other stuff.
It is captured in that, but it's not a maybe like a not a process model, but there's it isn't exactly a model process by which they arrive at that intuition per se.
Right. Because that's what I'm saying, could be the cognitive pieces.
Yeah.
I could just shunt it all into some kind of noise term and just say, this is I guess for the cognitive model, is there a way of thinking of like a startup person with or without this kind of technology has having different cognitive models in the situation? It's like a purely human, there's like the cybernetic model of investors. I don't know how to think about that exactly, but
I think that's it's yeah, maybe. I guess it depends on what's being modeled, per se. You know, if it's a model of maybe more closely tuned to here's the cues that the either investors or VCs use in order to draw an inference about, you know, latent variables or something like that. That's more cognitive. But yeah, it is. I think there are ways broadly of doing something like that, but it is really tricky once it gets to the idea of if this is almost supposed to help construct the model for the purposes of being used by some agent in a way. I don't know. I don't think I've really seen that before in the field, just because generally it's very positive in the sense of you're using this to describe how you know, an investor would incorporate information and interpret it in certain ways in light of their model, which is represented as some basic theory, or how the founder might have some conception of the investor and how they then might apply that mental model in various ways. But this is, you know, if you're saying like, I want to help them construct the mental model. I mean, there's still, I think, some part like a gap between even doing that by itself.
Got it. Yeah.
And Bayesian cognitive modeling. It's a hard gap to bridge there.
Has anyone heard about the Bayesian workflow by any chance, a term? Yeah, I think from 2022, Bayesian statistics, partly led by Andrew Gellman's school, somehow extended the Bayesian inference to Bayesian modeling workflow because it's setting the modelers as the center of the modeling activity. Meaning, like, what should we choose as the initial prior model? And based on that, how do we make sure that the computation we're using and statistical model we build are consistent with each other? And several loops of model specification and testing framework. So I thought that might be somewhat kind of very cognitive, because if the analysis that we want to do does not require like 5 different levels of hierarchical Bayesian modeling, we could just start with 2 levels. And if this doesn't work well and does not fit our purpose, then we add more hierarchy to that. So the point being, I think with the help of Rahul, I'm trying to distinguish Bayesian statistics and Bayesian cognition. But this itself is another cognition model of mine because so far separating them hasn't been a very profitable abstraction to me. But now I'm addressing different audience. I feel the need to somehow separate them. So
I mean, do you anyways gain anything by calling it cognitive instead of just saying this is a statistical analysis, using it for this purpose?
In this case, you don't get much benefit from it being Bayesian either, like.
Yeah, sure.
I think that's what I would say, is this, you just run a logistic regression model, non-Bayesian and get the same result. And so I think that's where my question would be, is what's the benefit of framing this in a Bayesian framework? You know, yeah, you put some non-informative priors on the parameters, but what do they really mean?
I see. Yeah, so great question.
I'm sure you get almost very, very, very similar parameter estimates from and output from doing this all as in a frequency framework, you know.
Yeah,
It's just statistical.
great question. So perhaps one thing I think Bayesian can add is, like, let's say we did this for 9 different archetypes of investor. And that would give us different posterior distribution, and maybe we can kind of cluster them, and that can give family tree of the investors. And that's how I think about the population level and individual level of analysis. So yeah, Josh has been
I just want to voice my displeasure at these graphic pictures that these people who are like destroying the country. It's a little bit, you know. Some audiences of the business will probably love it. They probably, you know, bow their feet to these people, but I think then there's nearly all the line actors.
Kind of like turning into Disney prince.
Yeah, like you know. There you go. not helpful. But
Are you leaving because of this?
no,
Please don't.
It was just really irking me, but good talk otherwise. Thank you.
Yeah. Oh, maybe we should exit this slide.
Yeah, where I thought you were going at the beginning in the calling it Bayesian was that you were going to manipulate your sort of synthetic investors' prior beliefs before the interaction with the materials. I'm not sure if that's profitable, honestly. It seems a little odd because you're then essentially telling the model what to do and it'll do it.
In some sense,
It's not deterministic, so I don't know. Maybe it would be useful.
I mean, it's kind of like what the archetypes are in some sense, right? It is
That's
like these are
true.
different
That's true.
agents that have different
Yeah.
beliefs about what matters in this kind of context, I guess. But yeah, it's like what exactly would you
I guess that's
do?
for the priors, like I value this and don't value that. I was more thinking priors on like the details of that are being manipulated too of the actual ventures.
Did you
but
mean the investors?
More
priors or
specifically,
the-
well, so there's an LLM model that's like, and you say, pretend to be so and so, and it's trained. You're saying just behave like this person in all this text that I'm going to give you, but you're not saying, and you think this and you think that, right? So you don't. So I mean it's probably a good method because they're so good at what they do. But another way you could make it more that you could take it to like a cognitive type of experiment would be to specifically intervene at that level. I don't know, I haven't really thought it through. I'm thinking out loud.
So what I've been trying at first with this is how to infer like fixing what the startup profile is.
Yeah.
How do I most efficiently find the investor archetype that would invest in me? That was kind of the first approach. But we can also spin that around, like given we have this investor archetype, what is the kind of attribute we can somehow, should we file the patent or should we hire one more PhD from MIT or something like that?
Well, no, so presumably if you're thinking about this as a product for people to use, they might not have the complete menu of all investors to pick from.
Exactly.
They just know that this person's going to be there at time T, right?
Yeah.
So they can be like, well, how's that going to go, right? Based on what I know about this person.
Or I thought it could be almost like obviously not gonna be talking about one of these particular investors, but you're trying to figure out maybe as you're, going through the process, what kind of archetype you are pitching to, and then, based on
How to find that
yeah, like
person.
cues
Yeah,
that
yeah.
they're like they respond in this way, maybe you use that to help you draw an inference about which kind of archetype they are.
Mm.
Like maybe they mention a little skepticism about this or more
Yeah.
positivity about that, and then it's kind of externalizing this model where then you can somehow use this to say, oh, it's more likely I'm dealing with this kind of investor than that kind of investor, and then tailor my actions accordingly or something. But I don't
Yeah.
like what do you expect doing with it? I don't know.
Yeah, so I agree with it has several use cases. So that was why I was asking for feedback on like what I could prioritize. And just a tangential story, I wanted to kind of use this for myself. So I made a profile in a dating app. Where dating app, you have some categories like one child and I don't smoke. I like exercise. And based on that archetype, I'm meeting them and trying to infer what archetypes there are and whether they fit with me or not. So I think like I could change my kind of will to have baby or not, or they can change their will to have baby or not. But my point is somehow making a partnering between the founder and investor idea is still there. So it's like matching problem, like huge matching problem.
I have some questions around, so at first I thought that the archetypes were, like how you were calling kind of like the synthetic, investors, so I'm recreating Mark Anderson and I say that I have an archetype that is Mark Anderson, but now I'm understanding that it's not that, it's rather certain traits that you find in Mark Anderson, plus like a bunch of investors that kind of behave like Mark Anderson.
That's a good question. That's a good question. So that was why I was asking, should I go more like investor archetype and do some analysis for that? And for the first one, I would collect all their sayings. And
then you classify them into?
yeah, kind of that can be one analysis. But in the second one, it's more like I have different investment stage, like what industry they're in, and sector expertise, investment philosophy, and risk tolerance, decision-making style, and time horizon. And perhaps Mark Anderson can respond to one of the kind of general attributes for that.
Mhm.
So there are two approaches to developing this.
So your idea is not to develop a model where you say, I'm creating like the twin of Mark Anderson, and I know that if I add my Anderson, like synthetic Mark Anderson, its opinion on my startup, it will give me the opinion that Mark Anderson would have in real life.
If you're really committed to getting investment from Mark Anderson, maybe I would do that, but maybe
Because I saw that like the screenshot was
yes,
exchanging with Mark Anderson.
yes. So that was just one example to show what do I mean by investor archetype,
Mhm.
because he is really affecting a lot of people's philosophy.
Mhm.
So yeah, but I
And-
agree with you.
And then, I mean, what is it like? How do you measure if your model is making the right decision? Is it like just a distance metric? Invested, did it invest, or how much did it invest?
So like,
what are you measuring?
got it. Great question. Like I said, if you're really committed to getting investment from Mark Anderson, what you need to measure is the 1,621 columns of three answers and torture Mark Anderson to give their actual answer for that and compare them, right?
Mhm.
But that's not realistic, I think,
Mhm.
and not what actual founders would be interested in. So that's why I'm kind of pivoting away to just focusing on one specific investor, but rather more on like different populations with different characteristics.
So you train your model on those investors that have those characteristics invested on those startups. Therefore, you are kind of like a sum of all those investors, and I need you to tell me if you have invested. I'm just,
yeah.
I'm wondering, how do you control that the model is telling you the right?
Right, I mean, your question's about validation.
Yeah.
right?
Yes, yes,
So it's
yes.
like, if you could find some
Like,
data
what's your
set
valid
where it's like,
invested, already invested?
these
in
people
what?
actually did invest in this
Yeah.
company with these characteristics.
yes.
And then you could run it and see if you get the same results, right?
So-
Definitely convincing to your sort of audience of
I see.
people, right?
Yeah.
Otherwise, you're just like, well, I don't know, if this model and I don't know.
I
what's
see, I
doing,
see, I see.
right?
Yeah.
They want to know if it's like, if it works.
Yeah, so Mark Andreessen has like in PitchBook, they have like 20 years how what investment
Right,
that
right.
but the thing is there is no data for what investment he didn't make. So there is some problem with that.
Yeah.
I mean, it does also raise this question of what even is the format and information that they would have in an actual investing scenario. This is, here's like this paragraph of text, but it's not that common necessarily. I mean, maybe in certain circumstances,
They
but
probably have a more extensive document. Or something.
yeah, exactly. Like, oh, maybe you're pitching to Y Combinator, to get into their program, and then you've gone through the program and you have contact with people, or, like there's more information
Yeah.
usually, or at least different kinds of information than you would see from a one paragraph text description. So how representative is that even of an actual investment decision format wise?
So then if we're working with just like some type of prompt engineering and this is one paragraph explanation of who I'm talking to, at what point comes the whole like, oh, I fed the model like all the books written by such and such. This is my because I have the gut feeling that the difference between the generalization of the population of investors, you have a background in STEMs, you work for in STEM, whatever. You come into the individual preferences and heterogeneity. A good way to approximate that, I would say, is like what they've said in the past, whether like the books that they've written or the TED Talks that they've given. So how do you, and is it relevant even if we're now working with general characteristics rather than like individuals?
Yeah, maybe we'll revisit that after I finish this last section of evaluate.
Okay.
Yes.
Sorry.
We have 10 minutes left. So scholarly contribution for this is framework bridge decision theory with entrepreneur finance. And there is existing normative versus positive tension here, I admit. And novel approach to understanding heterogeneity in expert decision making, and enables exploration of rational meaning construction in high stakes investment contexts. So to be honest, I'm most interested in this. So how can tool help investor and founder construct the rational meaning of the terms? So you can imagine like using some probabilistic program actually being developed in Vikash's lab about given some input, how does that program synthesize the term sheets, for instance. So I've been interested in that topic in general. Happy to chat after this if you have some ideas. And practical applications are for entrepreneurs, match effectively with suitable investors using characteristic-driven insights. And for investors, actually, I find this really interesting. I spoke with several VCs, and they are very fearful about whether they have some philosophy in their decisions. They are doing it with their gut feelings, and they want to learn their style. So they were asking me whether this tool can help them map into establishing their own style. Like every VCs or investment firms has an investment thesis. So why as a founder should I choose you? And they have to explain that as well sometimes. Unless you are really like Mark, Andreas, and everyone is in line with wants to get your funding. So conduct consistency checks and mitigate biases through comparative analysis are practical applications. So we need some mutual understanding and rational discourse between the founders and investors is the practical application. So yeah, I think it's similar again. Its computational framework offers scholars new approach to understanding rational meaning construction in investment decisions. And we have different application use cases for entrepreneurs and investors.
Right, you say rational meaning construction.
Yes. That term appears in word-to-world modeling paper by Josh Tannenbaum et al.
I feel like that's just a very different kind of setting. I mean, this is not the same kind of setting. I mean, there's
Mm.
strictly speaking, there isn't even just going by the term, like there's no meaning necessarily in here, or at least not rational meaning in any kind of similar sense, right? It's just like, okay, you get some kind of like you're interacting with some simulated version of this person. Here is just another way of formulating the
Got
fact that they really like, and they think execution is important, the idea is less important, et cetera, et cetera.
So for me, when I hear the word rational meaning, it's like, let's say I have 3 people I want to reach out, send my pitch deck, and get like your potential investor of me. And when I think of rational meaning construction of those kind of interaction, it means I know exactly what would be Raul's and Emma's and Ned's difference in reacting to this. I can somehow make some expectation, and based on that, adjust my pitches or whatever. But at this point, just entrepreneurs just send out their pitches without expecting anything. So I think they learn less by different reactions from the VC. So my point was, we want to understand what the meaning of reaching out to specific archetype or characteristics of, like, let's say if I'm an early stage EV, I want to reach out to a person who has been investing in transportation a lot and who has a great network for that and who has a high risk appetite, because I know my technology is very risky. So those attributes somehow interact to form the likelihood of the deal making being invested. But we don't have, at least as far as I know, a statistical model for that. Or I think I classify this as a cognitive model because this is like a profitable abstraction of what I need to do for action. But happy to get your different opinion about cognition and statistics. Yeah, so this was the 3 feedbacks I wanted to get from you. So I think we discussed the kind of covered the first one, whether the archetypes or more abstract investor characteristics. And the second question is, what do you think, like if you are a founder, what do you think would affect your decision to reach out to certain people? Like, do you feel like, do you vibe a lot with person with a certain philosophy or high risk tolerance or low risk tolerance, or the time horizon? And for the last one, for entrepreneurs, would inverse planning capability or pitch optimization, which would be more helpful? Yeah. So maybe I should put it here. That's the end of my talk. Thanks.
Those are hard questions to answer because I just, do behavioral research all day. So like hard to imagine what somebody who runs a venture capital would be thinking. That would be it.
Was anyone here like really interested in doing a startup? I'm just curious. No?
Sounds really.
Okay.
Faculty research is kind of like running a startup.
I agree. Charlie actually said that MIT is a bunch of startups.
Due diligence for private equity.
Oh, cool. Wow. Do you have any?
Know way more about it than we're all talking about right now.
Do you have any insights in what affects the investor's decision?
And so the big question, the first thing that occurred to me, thinking about the broader question here, is that, you know what alpha decay is?
In physics?
No. Although field and nuclei are also important. So like alpha is your risk adjusted returns,
Yes.
and alpha decay is like the effect on those returns of information, like whatever your edge is leaking out, so if you have some trading strategy that allows you to generate alpha and it leaks out of your organization somehow, that's alpha decay, right?
So higher alpha is you're more risk tolerant.
Higher alpha is you're making money, and no alpha is you're not making money, or at least not above the market itself.
Okay.
Okay. And so there's going to be a feedback loop here. So insofar as this thing that you've got here is observable, all of the stuff that you can get from any sort of model like this is going to get computed away. And so if everybody can see this, then it doesn't matter. You see what I'm saying?
Yeah. So I've always questioned whether this is a zero-sum game or non-zero-sum game.
Well, if you have this in secret, then that's great, then it can work. But insofar as it's observable by the whole community, then they'll immediately compete away any possible gains from.
Sorry, for, say you're a behavioral scientist, that don't know what you're talking about exactly. In lay terms, you're saying like this type of product would actually sort of shine light on secret sauce that people don't want to shine.
No, it is the secret sauce, except if everybody has the secret sauce, then it's not the secret anymore.
Oh.
So,
But people like to assume equilibrium, but it takes time to reach to that new equilibrium. So it takes like diffusion time for information to spread out, no?
Sure.
So, yeah.
There's been a lot of research going on negotiation, and when people are trying to negotiate treaties and get to this kind of like idea of equilibrium, and you just train yourself talking to an LLM that is supposed to be representing the opposite party. And even like spin doctors are using it for political campaigns. So, saying like, all right, you're talking to this person who's not from your political field. How would they react? So, I mean, and so yeah, I know that there's research going on this training stuff. So I'm not like completely leaking the secret sauce. Feels like everybody has like their secret
But you mean
sauce. And, like,
specifically in this context of investor decision making,
Like,
right?
I imagine like
if everybody has access to like, oh, what would Mark Zuckerberg think about my startup, and like I can adjust accordingly to make sure that Mark Zuckerberg would be happy. When you're finally in front of Mark Zuckerberg, he will everybody's trying to please him. So like if everybody knows that we have to say, I don't know,
Yeah.
the Red Sox is my favorite team, well then it doesn't become like a relevant element.
Right.
Now, what I'm wondering is like you were talking about this gut feeling driving a lot of the investment. To what extent don't you think that you could frame this as like it was like in a textbook that I had this year in class was like that most of deep learning problems are inverse problems where like you're trying to infer hidden hidden
Latent.
parameters from observable
Data. So, yeah.
So it's like it's inverse and almost ill-posed as well, and like the Adamar's things like criteria of ill-posedness, well-posedness and ill-posedness.
Great question.
Then you just fall into like all the regularization type of framework, like how do you solve an ill-posed and inverse problem? Like there's I know that there's some pretty heavy math that is kind of cool.
I'm not capable of heavy maths, but I like the point about inverse problem because what is observable for existing data is like, for instance, we have a deal decision making by Mark Andreas. Then this is observable, right? Like what was this firm that got Mark Anderson? I think Airbnb got Mark Anderson's investment. And we know whether they were invested or not. And what we're doing is somehow inverse solving what their perceptual dimension is for these two things. And in specific, all these parameters underneath, where observation maps to these two things that most, I think, entrepreneur finance people agree on can be grouped into two. But this also can be added, and also how this affects this one. So, but now the problem is it's more about how one agent, so here there's two agents, investor and a founder, and like they are, like for instance, founder is trying to reason and inverse plan their, like what I'm going to show to the investor, given that I have inverse solved their mental model. So it's like agents recurrent in that I'm reasoning about your reasoning, and I don't, unless you are kind of a CTO for OpenAI and you like all the investors wants to fund you, I don't see a lot of incentive for the investor to model each startup's mental model. So my point was the reason why I want to set the entrepreneurs as a customer for this theory is because they have great need to model the investor because they're in a higher kind of status in this decision investment game. Did I answer? Am I answering the question? Yeah. To summarize, this has some inverse problem component in it, but it's more like like you said, negotiation situation where there's recurrent inference going on.
Would be worthwhile to scrape like every episode of Shark Tank or something, just for some validation. Like, it wouldn't have to be a specific archetype really, but I guess that would be more fun to like a more broad search of the possible investor space instead of these like archetypes from existing data. That's really the only way to validate them, obviously, but yeah.
Got it.
Yeah, and like, especially if you think of Shark Tank, or what you were saying about the gut feeling, and like someone like a 67-year-old investor might not. I mean, if you're a 67-year-old investor, you could almost see yourself as like a very fine-tuned model. You know what works and what doesn't.
You have an idea of what works and what doesn't, yeah.
You have an idea of what works and what doesn't. No, but you see what I mean? Like, you have your intuition is just based on all the other cases that you've seen. So to what extent, like, summing all the decisions made in the past as like they're going to invest yes, no, might not be the straight. Like, you should be is there like some type like putting some more weights on the latest decisions, and they might be more relevant
Yes.
than the first, or like say, at least saying like we put more weight on the decisions that ended up being great deals. And
so correct me if I'm wrong, but the investor's decision is affected a lot by the economic state. So if this early stage founder, if their later stage is expected to be a very downturn, they become very conservative in investing in them. So there is some time heterogeneity in the decisions that are stacked up. So that's a good valid point.
Also, I guess if we think of these investors as like concretizing their decision-making process over time, they're probably more defined by their failed investments or things they didn't jump in on, which we're not going to have those about. We don't have any negative sampling model here, but like the people who didn't invest in PayPal or whatever, like that's what defines their decisions in the future, not the ones that are like, we're talking about.
Interesting.
But again, we don't have access to that data.
I think we need to wrap up. So thanks a lot, and just plug perhaps of your interest. We are having a session by Josh Tenenbaum next Monday from 5:45 to 7:30. And we'll cover intuitive game theory and hierarchical Bayesian modeling and many more. So please come.
do we have to wear a ZP? Or...
You just show up.
Yeah, you can just show up. Oh,
I'm
thanks.
used to like the French system where you have to send emails to like half of the school to make sure that you're allowed in the building. So this whole like no having to deal with administration is kind of
Or if you send me an email, I can add you to the reading list. So we're gonna distribute the reading list today or tomorrow. So are you coming?
Cool. I mean, I should be free.
Cool. Are you coming? Could you remind me your name? Matt? Matt, are you coming? Yeah.
Coming?
I am coming.
Are you?
Rahul
I
is
am.
coming. Yeah. Any last comments?
Generally, I just wouldn't call it Bayesian cognitive modeling, but otherwise, I mean, could be maybe useful for people to sharpen the sense of what might get, like pitch optimization stuff.
Yeah. Where I would like to get your input later is like, how can I spin this to a resource rational kind of decision-making model? But it's for another time.
Well, I mean, I just wouldn't connect it to that. I think that's
Interesting.
I would just consider these separate things more or less.
How do you define cognition?